My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. My friends, I'm just trying to make you a little money. My job is not just to entertain, but to explain how we can have such good days. So call me 1-800-743-CNBC. Tweet me at Jim Cramer. The President of the United States is a living, breathing, talking lightning round, giving you buys and sells rapid fire. You sure don't know his views ahead of time. Sometimes, of course, they completely contradict each other. Doesn't matter. Wall Street likes the energy, loves the ideas that are coming fast and furious, which is why the Dow gained 408 points today. S&P advanced 0.53%.
House of pleasure.
But the Nasdaq gained just 0.22. This is all new, though, so we have to spend some time talking about how to handle it. This could be an ongoing theme, I think, for 4 years. But we have no choice. I have to explain to you the way things are being translated from Washington to Wall Street. I want you to stay current, and I want you to understand the presidential lightning round. So let me say a few things about what I now believe we can expect from the second Trump administration. Not political, but money, economic. First, if you're a trader, Trump's a dream come true. He generates a huge number of catalysts every time he talks. I don't think most people should trade too hard unless you do it professionally, but this is heaven on earth for them. Second, there are analogs. Hey, when Reagan came into office, and of course I was old enough to be trading then, he talked about building a 600-ship Navy. If you bought the defense contractors, you made a fortune. The difference is Reagan was not rapid fire. He was much more measured. But it's still the closest analog I come up with. Third, every time Trump talks, it feels like there'll be repercussions on Wall Street. Now, sometimes it's purposeful. Mostly it's to show he's more on the ball than his predecessor. Not kidding. So let's start with today's speech given in Washington, shown in Davos, and the subsequent questioning by some executives about what he intends to do on certain issues. Trump used his speech to frame his presidency. Now, we know he wants to make America great again, or for a given definition of what the word great. That's always going to be his theme. But when he speaks like this, you have to take what he says with a grain of salt. Remember, this is mad money, not mad politics. It doesn't matter how you feel about Trump. It only matters if you can make money off him. That's what we're here for. Now, I know you could say, wait a second, Jim. What are you, like Cal and Steinbeck's East of Eden, buying bean futures to profit off of World War I? As I see it, though, I'm just trying to educate you about what's actionable and what's not. The big picture stuff is not what moves the market. Might excite you, but it doesn't move stocks. Next, the president wants to talk about energy policy all the time. To take advantage of what he calls liquid gold, that's under our feet. I know this sounds crazy to those who don't remember what happened during the previous administration of Trump, but the oil companies actually started drilling. They pumped like mad, and it ended up bringing the price of oil down and then really hurting their profits. Since then, they have gotten disciplined. They're holding back from drilling to keep prices high, and they're making much more money. Many of you might be tempted to grab an oil stock because Trump is so pro-oil, but that would be wrong. As Rusty Brazil, our go-to energy expert, said just last night, the oil companies pretty much operate as a herd. They got crushed last time when they drove the price down by pumping too much. President wants Saudi Arabia and OPEC to pump more to get prices lower. It's a possibility, but the U.S. controls the price of oil these days, certainly more than the Saudis and OPEC. Our producers are disciplined. So, I don't see the world flooded with crude. Sadly, the drill baby drill stuff is uninvestable for the moment. If President Trump finds a way to get a pipeline built quickly out of the Permian Basin, or if he can help build the liquefied natural gas terminals faster and make it so FERC really loves them, the Federal Energy Regulatory Commission, then we can produce more of the stuff because there's a huge market for our natural gas overseas, but it's trapped right now in the Permian. Otherwise, from Wall Street's perspective, non-story. But it is why I own the natural gas-oriented Coterra for my Chapel Trust, though. It's been a winner, but its natural gas is in Pennsylvania. The president did greenlight about what I talked about last night, the return of coal. All right, now, I personally don't like the coal stocks, but Peabody has the cleanest coal, and Alliance Resource Partners has one of the most lucrative utility coal businesses. Utility coal is what's in play here. It can substitute for natural gas if natural gas goes too high. The president talked about that. Coal's been losing market share for ages because it's so dirty. Made up over 30% of our energy a decade ago, and it's down to 15%. But Trump doesn't mind. He likes it. He actually said good things about it. And you know what? We need more stuff to power all these data centers, and coal can work. Those stocks can work. The president talks about how interest rates should go lower. He wants to draw Bone J. Powell into lowering short rates. Again, non-starter. Trump can't bull rates down. He doesn't control interest rates. They're set by the Fed and the bond market. If Trump really wants to send interest rates lower, he needs to shrink the budget deficit. No amount of hectoring will make any difference at all. Now, today, Trump attacked Brian Moynihan, the affable CEO of Bank of America, for allegedly discriminating against conservatives. Now, I have no idea what to do with this one, other than to say it's completely uninvestable. First, I've never heard of it, neither here nor there. Second, Bank of America's good stock. He called for a decline in inflation, but to do that, he'll have to find a way to cut food prices, insurance prices, auto insurance prices, home prices, healthcare prices. Didn't hear anything about how he's going to do that. All in all, not an actionable speech, even as there was plenty of action in it. Yesterday, however, we got catalyst galore. The president's data center press conference ignited the stock of Oracle, even as Oracle had already pledged to build many more data centers before this. Still, you have to assume for many people this is the first they've heard of that. We had ARM Holdings on Squawk on the Street yesterday. It's a company that designs the architecture for CPUs in the data center to go with NVIDIA's turbocharged GPUs. But we also had ARM on Mad Money last week, and the CEO, he said pretty much the same thing. So the stock went up big yesterday, and then people realized, wait a second, that's already known, and went right back. But there was one real winner yesterday, and it's one that went down. NVIDIA. If you want to build a first-class data center, which is what Trump's talking about, you have to buy chips from NVIDIA, because when it comes to AI, they're really the only game in town still. Now, NVIDIA went up immediately yesterday, but then there was no follow-through today because of an outfit called SK Hynix. It's another semiconductor company based in Korea. It reported a set of unimpressive numbers late last night. I think the weakness in Hynix had nothing whatsoever to do with NVIDIA. My conclusion, lots of people got faked into selling NVIDIA off this Hynix story. However, the big data center build-out verifies the demand for NVIDIA's products, so it's still worth buying, which was the case at the end of the day. It's still worth buying. I think we have to expect that President Trump will say something every day that gets a ton of coverage, just like I just described. We need to monitor these statements, but look, we can't expect all of them to generate actionable investing ideas, even if they do produce bullish animal spirits that boost the market. Go by the S&P. Now, there will be one-offs, coal, NVIDIA, Oracle. But for the most part, the energy, the flurry, the changing of the guard will simply lead to less regulation. And guess what? When you have less regulation, you don't buy any of these stocks. You buy the banks. That's what I told members of the CNBC Investing Club at my noon club meeting. That's right. You buy BlackRock because it's levered to the bull market, and Trump wants to stoke. And you buy Goldman Sachs, which will make a fortune from all the mergers and acquisitions that are on the way, especially when you no longer have to fear the wrath of Khan, Lena Khan, that is, and the FTC. Bottom line, Trump wants the banks to succeed, and a higher stock market is the badge he craves, even if he's saying bad things about Bank of America. But just because there's a lot of bluster, there are only a few tradable ideas. So I want you to do this. Before you pull the trigger, filter things and take advantage of the fact that the pin action for the banks is extraordinary. Mike in Illinois. Mike.
Hey, Jim, it's Mike.
Mike, I thought it was you.
Great monthly meeting today. Very informative.
Thank you.
Very structured, organized. The catalysts were great, very informative. Anyhow, I've got a position in Costco. I'm wondering if I should buy, sell, or hold additional.
Okay, as we said, we talked today on the call, and our view was that Costco could fall a little more, but it's never going to get cheap. So the answer is yes, you can buy some here because it is down from 1,942. I would wait to 900 though. That's when I'd pull the trigger. Dennis in New Jersey. Dennis.
Good evening, Mr. Cramer. This is Dennis from New Jersey.
What part of Jersey?
Hackettstown, over toward the Pennsylvania border.
Oh, okay. Yeah. All right. Go ahead.
Okay. My question for tonight is about IBM and wondering why they're not participating in the Trump election or...
Well, I got to tell you, I think it's just a matter of time. I think IBM is doing very well. I'm not as close to it as I used to be, but I think IBM is doing well, and it's got a legitimate place when it comes to artificial intelligence and compute. So I like it. Hey, why don't we go to Gabriel in California, please? Gabriel.
Yeah, hi, Jim. I'm calling from Lincoln near Sacramento. I found you during the financial crisis, and thanks to you, I've been able to build up solid IRA and investment accounts for our family. So thanks for that.
That's what I want. That's what I want. We taught well. I'm happy. Let's go.
My question, given the upcoming merger of Capital One and Discover Financial, and given that Discover is at all-time highs, should I wait for the merger or sell my Discover?
Okay, it's a really interesting question, ma'am, and I'll tell you what, Gabriel. At 12 o'clock in my noon club meeting, I recommended the stock. I said that the mergers, because it's going to merge with Capital One, is going to be excellent. And I was talking to Jeff Marks and saying that we should add Capital One to the charitable trust, so I can't tell you to sell it. All right, listen, we're going to have to monitor what President Trump says every day, but we can't expect every day to produce actionable ideas. Stop, look, listen, don't pull the trigger. Mad Money tonight, I'm getting a read on rates and more with SL Green Realty top brass. Fresh off the company's really nice report. And I love New York. Then, what could a Trump White House really mean for oil stocks in the energy landscape? I'm drilling through the details and telling you where I stand. And later, I'm circling back on a health insurance player that you called in on, and you know how much we like to answer your questions. I suggest that you stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.